What's up, everybody? Definitely is quite the rainy night here. The city does look good in the rain, I will say that. It's back to reality Monday tomorrow, and it's going to be a pretty big week in the markets too. We'll talk about it tonight during the markets a look ahead broadcast. Lots of corporate earnings, a little bit light on the economic data front, but you're going to be hearing from the Federal Reserve and Fed Chair Jerome Powell on Wednesday at the FOMC meeting. It's going to be interesting, really not necessarily to hear the comments of the Fed chair. However, I think it's going to be more entertaining and interesting to see what the comments are going to be like from President Trump, because every single time Fed Chair Jerome Powell does anything that even slightly contrasts with President Trump's opinions on the markets, it's like a firestorm on Twitter and Truth Social, if you will. So it should be quite the interesting fireworks, because probably not going to get much, definitely not going to get a rate cut this week, as the Fed funds rate sits tightly at 5.25%, 5.5%. We had some pretty good economic data come out last week. Obviously, we talked about the non-farm payrolls. So if we're getting, better than expected payrolls, 177,000 jobs added in the economy, well, there's really no urgency, so to speak, to kind of cut interest rates. Also, inflation remains rather tame, if you will. So anyway, what's up, Sally? I see Ethan G is here. This is Hey Tom, Many Miami videos. Yeah, we have probably about 97 Miami videos on the channel. So go check them out. If you go to the videos tab of Walks on Wall Street, there's a videos tab and a live tab. You can check them all out. I see DC322. What's going on? Lance is here. Alan, what's up? Hunter Butler says, I just missed you, Tom, near Grand Central. Ooh, just missed you. Hopefully you had a great weekend. Mike G is here. Says, happy Sunday. What's up, Mike? Mr. 15 Central Park West. And Joe Ratz. We'll wait for the FDNY to go by. Toby Sanchez says, how is Miami Beach? Miami is always amazing. It's a really, really great place, and I always get even more impressed every time I go back. David is here. What's going on? Well, I guess we'll just do the quick audio and visual check. So if you guys can hear us, and if we're streaming in 1080p, just go ahead and leave a thumbs up in the chat, and we'll go ahead and get this thing kicked off. Lots of, big powerhouse names reporting earnings throughout the upcoming week, but about 75% already of the S&P 500 has reported. And I think of that 75% of the 75% beat earnings expectations this earnings season, even though it was quite the turbulent earnings season, so to speak. Anyway, we'll talk about that in a minute. Larry Adams is here, Sally, Harry Connor. We're actually walking close to the Pfizer headquarters, or should I say the old Pfizer headquarters. If you were joining us on our Friday night live stream, we walked past the Pfizer headquarters to the Hudson Yards, and they just moved from 3rd Avenue, right? And this is going to be New York City's largest conversion project. So it's going to go from office space to apartments, and that's going to dethrone Harry Mackelow's One Wall Street as the largest office to residential conversion project in the city, which is really good news because we are in a housing crisis. I would say an affordability crisis in Manhattan. So, the more supply that comes on the market, the better. Doc 7, what's going on? Good to see you. I see Luke says hello, finally back in Sunny Isles from DC. Well, I'm glad you're back, and I'm sure you're glad you're back, because I think DC is having the same exact kind of crummy weather that we're having in New York, which is unfortunate. But I mean, over the past 2 days, the weather has been pretty good in New York, but it's just today that's been terrible. Michael is here, says I really liked your Long Island City walk. Yeah, Long Island City is another one of those neighborhoods that has really exploded in popularity. I mean, talk about explosion in rent, right? I think Long Island City is one of those neighborhoods that back in the day used to be predominantly industrial, right? You still have the Long Island City Industrial Park, but pretty much the whole neighborhood used to be like that. Auto body shops, electrical contractors, HVAC contractors, a lot of blue collar stuff there. And now if you ever, take the subway out to Long Island City, pretty much every single building on every other block is a new luxury high-rise condo apartment, luxury rental. It's pretty crazy how Long Island City has changed. Pretty wild. Tatted T, what's going on? Says the weather is terrible in Southern California too. That's too bad. Well, you guys in California usually always have good weather, so. Anyway, Craig Thompson says hi, late in New York City and Miami. And love your walks and info. Thank you very much. Thank you, Craig. Appreciate you very much. It's so cloudy you can't even see the top of One Vanderbilt. Anyway, we'll kick this off. Good evening, everybody, and welcome back to Walks in Wall Street. Today is Sunday night. It is May 4th, 2025. Just as a quick review, we are pretty much the lion's share of the way through earnings season, and we've had all of the Magnificent Seven stocks report earnings, with the exception of NVIDIA, right? And earnings have come in pretty impressive. Now, on a select few names, we've had guidance come in a little wonky or a little bit below expectations, but that's to be expected, right? And I think a lot of companies right now can get away with that, right? If you are in an environment of absolute certainty and you come out on the earnings call and you start to revise your guidance, or you kind of a little bit shaky on your outlook, well, you're going to get punished, right? However, if you're in an environment like we have right now, trade wars, tariffs, lots of uncertainty, the easy thing for a lot of these companies to do is either revise guidance or not even give guidance at all. But focusing on a lot of the mega cap tech stocks, really good across the board, especially in terms of net income or profitability. I mean, Microsoft really is a standout in terms of their cloud computing platform, Azure, growing significantly, even when you had Amazon's AWS miss a little bit of expectations there. But multiple billions of dollars in profits were raked in the first 3 months of the year from big tech. We talked about Tim Cook and Apple, even though looking out the next 3 months, Tim Cook expects Apple to have a hit of about 900 million due to all of these tariffs. But his company pulled in over $24 billion worth of profits over the first 3 months of the year, right? Pretty significant stuff. We talked about some shaky issues at Apple, but I would say the pure play cloud performers, such as Microsoft's Azure, Amazon AWS, and Google's Google Cloud, came in really well. I was very, very impressed across the board. I think we should all watch, in particularly, I would say, the unfolding of autonomous driving. Google Waymo, unbelievable results. They are expanding across the country, and we are going to get a little bit more clarity and, I should say, certainty in terms of the autonomous vehicle market and just the rideshare market in general this week when we have Uber, ticker symbol UBER. They're set to report on on Wednesday of this week. Same exact day as the FOMC meeting. So earnings so far have been pretty good, which is a positive. Palantir, which is currently a true market leader right now, they are up on the earnings chopping block tomorrow. It's going to be very, very interesting to see how Palantir reports tomorrow, and not just interesting to see how they report, but interesting to see how the stock is going to react. I think in the market where we are right now, it's more important to pay attention to the reaction around earnings than the actual earnings themselves. Now that may seem obvious, but if I can kind of explain it a little more, Wall Street is really, especially in this environment with tariffs and the trade uncertainty, they're more so looking at what the company is going to earn in the next 3 months. So even if they reported lights out, blowout earnings over the first 3 months of the year, well, all of this Liberation Day stuff, so to speak, those catalysts aren't really going to hit bottom line until next quarter, right? So analysts are going to be paying much, much closer attention to forward guidance and outlook, right? Also, Palantir is one of those stocks that have been kind of leading the market as we're looking at this beautiful view of Grand Central Station. You know, while a bunch of the stocks in the market have been getting a beating, and as the indices are well off their highs, you know, Palantir is actually racing into new highs, trading at new 52-week highs and into all-time record highs. You know, Uber is another one of those stocks, right? I think Uber last week on Friday closed at a new all-time closing high. So not a new all-time record high, but a new all-time closing high for the stock, building out a nice cup with handle pattern. So it's going to be interesting to see that reaction to earnings. Now, lastly, just to kind of point out, the market is very, very overbought here, short term. If you look at the track record over the last 2 weeks, both the S&P 500, the NASDAQ, and the Dow Jones Industrial Average is on a 9-day winning streak, okay? So we've closed positive across all 3 major equity indices 9 days in a row, okay? Statistically speaking, that means we're, you know, primed and amped for a pullback at some point, right? Is that going to be tomorrow? Is that going to be throughout the entire week? What is the depth and duration of that pullback? You know, that is to be seen. So one of the things I really wanted just to hammer on tonight is that, you know, the positions that you have on now, you have to be prepared. Either you should have your positions hedged, or you should be kind of mentally prepared for a little bit of volatility, right? Because if the indice, let's say if the S&P is down 2% on the week, well, a lot of the individual names that you own are probably going to be off maybe 5 to 7%, or maybe even 10%, right? Just based on how high of a beta that stock is, particularly now that we have the FOMC meeting this Wednesday. So it's going to be a busy week. We'll break it down tonight on the stream. And let's say hello to everybody in the chat. I see Sunshine Vibes is here. What's going on? The one and only Professor Dario. Welcome, Professor. I think I told you on a previous stream, but I will be back in Little Buenos Aires at the end of the month, which I'm very excited for. Hopefully, fingers crossed, I'll be spending Memorial Day weekend in Little Buenos Aires, Miami. So I'll keep you updated. I see Melissa Banks has really enjoyed your insights into the market and the rainy night in the city. Thank you very much. Yeah, you know, even though it kind of sucks walking around in the rain, from a viewer's perspective, the city looks very beautiful in the rain, particularly as all the lights kind of reflect off the, you know, the wet pavement. It's an interesting experience walking around the city in the rain, assuming it's not too cold, right? And it's not too cold out tonight, so I don't mind it. It's actually kind of nice. Actually kind of nice. I see David is here. Says good afternoon. Tom. William is here from southwestern Pennsylvania. Hopefully the weather in your neck of the woods is good. New England Crypto, Alan is here. Good to see you. Josh L says, can you recommend any good resources? Hold on, it may be difficult to read the chats tonight because I am holding the umbrella. To learn day trading for beginners. For day trading, I don't know. I'm not a big day trader, so I wouldn't be able to advise for day trading. Another piece of news that we didn't cover is Warren Buffett is set to retire at the end of 2025. I mean, talk about a investing legend, right? And it's going to be pretty strange from here on out going forward. I mean, every single year we look forward to the Berkshire Hathaway shareholder meeting, and to have Warren Buffett not be there from here on out is going to be a little weird. I don't know if I'm really going to be able to get used to it. The other question is it going to be possible for Warren's predecessor to kind of carry that legacy? I'll tell you one thing. I would not want to be the person, okay, that replaces or fills Warren Buffett's shoes. I mean, talk about massive shoes to fill, right? I mean, talk about the pressure that must be on. So we'll see. We'll see. If you have not watched the Berkshire Hathaway shareholder meeting, you could check it out. But, you know, Warren does kind of come off as a little bit tired. But then again, he is, 90 plus years old. So middle-aged grind. What's going on? Cheers. Rocket mobs, as Warren Buffett is the definition of a GOAT, for sure. I think the biggest lesson that I've learned from Warren Buffett, and really he kind of hammered this home over the weekend, is, don't kind of be, I'm trying to paraphrase him in a way that makes sense. Don't be rattled by the short-term volatility. Now, that doesn't mean don't hedge your risk, right? But there's a lot of people out there, and we kind of talked about this earlier, that ever since the 2008 financial crisis, a lot of investors have PTSD, post-traumatic stress disorder from investing. And every wiggle and jiggle in the market, every time the S&P goes down, 5 or 10%, they think it needs to go down 50%, 60%, 70%. They think it's the next financial crisis. It's doom and gloom. I mean, there's an endless amount of, channels on YouTube where if you just scroll through the videos, it's thumbnail after thumbnail of doom and fear porn and, oh my God, buy canned food and, don't come out of your house and the market's going to collapse. This is collapsing. The housing market's collapsing. The sky is falling. Nobody can pay their debts. Everybody's poor. It's like, my God, like, how do you watch these people? And it keeps a lot of people out of the market, and it keeps a lot of people underinvested, and it costs people a lot of money over the long term. So I think if there's one thing I learned about Warren Buffett is, don't worry about the things you can't control. Go out there, try to increase your income as much as possible so you can invest as much as possible over long periods of time to really compound out your wealth, okay? I mean, American exceptionalism is real, okay? Whether you like it or not, American exceptionalism is real. The US markets are the freest and fairest markets out there, and the lion's share of the world's innovation happens here and will continue to happen here, okay, for the foreseeable future, and you want to be a part of that. I think that's the biggest, thing that I've learned from Warren Buffett. I mean, guys, just think about our quality of life. Think about the things we're able to do. I mean, if we're able to pretty much have every single question answered for us, via ChatGPT or Grok or Perplexity AI, I mean, think about how good these things are going to be in 5 years, in 10 years. Think about the productivity gains to our economy, right? We talked about autonomous driving with Google Waymo and Tesla coming down the pike, right? This is going to be unbelievable productivity gains for everybody, even if you kind of do a post-analysis on your entire life. There's many people who watch this stream that may be over the age of 65 or maybe over the age of 40, right? You saw pretty much the entire internet build out in real time. You probably went to high school, you probably went to college during a time where there was no internet, right? If you wanted to study for a test, or if you wanted to do your homework, you had to go to a place called a library, right? And pick up a thing called a book and an encyclopedia and do research on your own by reading. Now you have all of these tools, all of this abundance, right? Even this live stream wouldn't be possible. Just 15 years ago, it really wouldn't be possible. Streaming in 1080p 15 years ago, no way, right? You really need a 4G LTE connection for this. So the rate of acceleration and the rate of change, right? You could just think about it like an S-curve, right? Think about it like a SaaS company. Reoccurring revenue starts slow, and then it just takes off on like an exponential curve. So I really do believe the best is yet to come. So you want to kind of keep a level head here and invest over long, long periods of time. Last thing I'll say about Warren Buffett, there's a really good article, and not just, you could actually watch the video of this. If you type in on YouTube, Warren Buffett net worth timeline, I think I have to find the video and I'll probably post it in the description of this, but the lion's share of Warren Buffett's net worth was made after the age of 65. Okay, so many people, will look at Warren Buffett and they'll be like, oh, he was super uber wealthy his entire life. No, he's compounded out the vast majority of his wealth after the age of 65, and that really goes to show that you need to be in this for the long term, right? Compound interest is really what moves the needle. So if you're a 19-year-old kid right now, if you're just getting out of college or whatnot, and you're listening to all these doom and gloom and fear porn nonsense about don't invest in the market, just hoard cash, or go buy canned food and live in a bunker or fallout shelter, you are getting robbed of your most critical years for compounding, right? From 20 to 30 years old, if you invest religiously in that time period, I mean, by the time you're 70 plus years old, I mean, you're going to be a very, very wealthy individual. So don't, again, to kind of piggyback off of, Warren Buffett, Berkshire Hathaway, do not get robbed of your most precious compounding years. You want to make a lot of money, increase your income, right? That should be the main focus, and invest religiously and systematically over long periods of time, and let that compound out, and you are going to be just sick wealthy. Hey, I see Nora Kins is here. What's going on? Hopefully you're well. Con I am. What's going on? Lance is here. Kathleen says, I hold Berkshire Hathaway, and it has done quite well. Wonder if the successor will maintain the same investing strategy. Well, I would say this. I mean, they've already selected I'm blanking on his name, the gentleman who's going to replace Warren Buffett, but I would say that, Warren Buffett is, and I always go back to this story. I guess it'll be a good story for Warren Buffett tonight. He's a very meticulous guy, and he's a very disciplined guy, if you haven't noticed, right? So I'll answer your question with a story that I often tell about him. So there's this archive of an excerpt of a Berkshire Hathaway shareholder meeting where this kid comes up on the microphone and asks a question. And the question is the following. He says, and he also asked the question to Charlie Munger as well. And he said, Warren Buffett, besides yourself and Charlie, who else on Wall Street would you suggest that we listen to, for advice or, follow their investing strategy? And it took him a long time to answer that question. He was like, well, I'm not really sure if there is anybody or if there is anybody that I would suggest or recommend. He's like, but if I really, really had to, I would say, Klarman. Yeah, maybe Klarman. And Klarman is Seth Klarman, who is the CEO and founder of the Baupost Group, who runs a very, very similar investing strategy, to Warren Buffett. And then he said also maybe Phil Fisher, right, who is the founder of Fisher Investments. And those two gentlemen, who have unbelievable track records, they also wrote books. Now, Seth Klarman wrote Margin of Safety, which is a very, very good book. So if you are into value investing, I think everybody should read Margin of Safety by Seth Klarman. However, you're probably not going to get your hands on the actual physical copy because there's only 5,000 copies ever published. And if you want to buy one, it's probably going to be in the range of about $5,000 to $20,000 depending on the condition. I think now that Buffett has, he's going to retire at the end of 2025, I think that book's going to go significantly up in value. Or you could read Common Stocks and Uncommon Profits by Phil Fisher. And the reason why I think that Berkshire is going to continue to compound out great returns that beat the S&P 500 is because Buffett is a very meticulous guy. And he is very, very reluctant to recommend anybody else's investing strategy. Right? He would barely give that answer. So I think he's had, 60 plus years to think about this decision. So I think he made the right decision. I would bet on his decision making that he has made the right decision. Chad McNabb says, good evening. What do you think about AMD, the company reporting earnings this week? Yeah, so AMD is reporting earnings this week, but I'm not really watching it that closely. Now, I'll pay attention to the earnings, I'll look at the number, but in terms of what's on my watch list, AMD has fallen off of that list a very long time ago. And the stock is really kind of stuck in the mud a little bit, right? It's well off the highs, very low relative strength. So will I look at the report? Yeah, but I don't even know what the expectations are, right? I couldn't even tell you what the earnings expectations are for AMD because it's, really been a stock that's been stuck in the mud, so I haven't really even been watching it that much. Hey, CW says, hello, Tom. Good to see you, CW. Welcome to a very... Whoa, look at this. The Empire State Building is completely gone. That's how cloudy it is tonight. Crazy, right? It's so cloudy and rainy in Manhattan today that the visibility is probably less than a mile or less than a quarter mile. You can't even see the Empire. Anyway, TPAC 5000 says, evening gang. I bought more gold on Friday. The only other tier 1 asset. Wildcat says, what kind of gimbal do you use? I think I just use an Osmo gimbal. I'm not too sure the exact one. Harry Connor says Buffett bought paint during the housing boom. Well, there's also another Warren Buffett interview that is such a good watch. And this was probably, I want to say, maybe 2013. Don't quote me on this, but I think it was either a 2013 or a 2014 interview, right? And keep in mind, this is when the housing market was just kind of recovering from the 2008 financial crisis, right? If you really look at the data, you know, the price of homes didn't, like nationally, didn't really start to recover until 2013, 2014, right? And then really kind of took off, you know, 2017 until now. But there was an interview that Buffett did, and I think the interviewer had asked the question along the lines of, you know, if there's one, you know, big opportunity that you see in the marketplace right now, you know, that you think people should jump on, what would it be? And he said, I think you should start buying single family homes. He said if there was a capacity for Berkshire Hathaway to buy, you know, 20, 30,000 single family homes, he's like, we'd do it today. He's just like, it would just be too much to manage. And he's like, it's just not feasible for a firm like us. He said, but I see that as a huge opportunity. And he was so right. I mean, imagine in 2013, you know, if you started buying up, you know, large swaths of single family homes in America, that was like the best trade. It was a great trade. So I always remember that interview by him, just coming out of the financial crisis. Out and About is here. Good to see you. Hope you're doing well up there in Canada. Kevin, what's going on? John Roberts says, hello everybody, this is John from Brazil. Cheers. Hal T16, welcome. Darren says, what do you think about Trump's plan to build a ballroom in the White House? I don't think about that plan. It's not even like a flash in the pan in my mind. This is the Marsh McLennan building. Almost looks a little bit ominous, doesn't it? Stein is here, welcome. So we'll kind of pivot and kind of talk about the markets a little bit. Now, as we know, you know, this market is short-term extended here. And a lot of the leaders that we've been talking about that are kind of already up and out, they're all trading well above their major moving averages. So I would say this week, you know, keep in mind that the S&P is on a 9-day winning streak. So if we have a pullback this week in any capacity, we'll let this guy go. We really, really want to make sure that that pullback is on low volume, right? And that would be very, very normal. If we have maybe 1 to 2 days, even, you know, maybe we pull back the whole week, if it's on very, very light volume and the trading ranges are very tight, that is a 5-alarm bull signal that this market is going much higher. However, if we get these, what I would like to call engulfing days, where we have, you know, 2.5% down days on the S&P that close at the dead low of the day on 200% average daily volume, that's a cause for concern that we may make you know, new lows, which I think is very unlikely at this point. But you do have to be a contingency planner. I think we put in the low 2 weeks ago, as you know, if you've been watching the live stream. We've now had 2 follow-through days that should start to be dragging us into the market. All of the leaders we know already, right? We've gone over this about 1 million times. The companies you should be focusing on as a market comes out of a bear market into a bull market are companies that are not 60% off the highs. are not companies who are trading well below their 200-day and 50-day moving averages. These are companies at 52-week highs, making new all-time record highs as the market is just trying to recover, right? We've already been over some of those names, right? If you look at Netflix, into new record highs, okay? Spotify, ticker symbol SPOT, trading into new all-time record highs as this market is trying to recover, and they all have similar characteristics, right? If you just run a screen of all the companies in this market over the past 2 weeks that have been breaking out into new highs, they've coincided with companies that have lights out earnings and sales growth, right? Netflix reported earnings, lights out. Spotify reported earnings, lights out. So those are the companies that, by and large, institutional investors have chosen not to dump, have chosen not to offload during the correction. There's a reason for that, and that's very, very telling. It's kind of what I like to call the needle in the haystack theory, right? If a stock is getting pounded through the floor, there's probably a reason why that thing is getting pounded through the floor. But in a bear market, when the S&P and the NASDAQ and the Dow, are down 15 to 20%, but you have this shining diamond in the rough that is making new highs, you're kind of scratching your head like, well, that's strange. Well, that really stands out. And then you could do a top-down, bottom-up, and say, that's why, because they either have some sort of a moat, they're either probably very immune to tariffs, which is the catalyst of the day currently. So those have been the leaders. However, those leaders now are extended. They are. There's a few other names that are kind of setting up. I would say that the number one name for me this week, and again, this isn't any advice to tell you to go and buy it. This isn't any recommendations. We're just kind of talking about individual names now, mainly because we're at a major pivotal point in the market, right? And that company would probably be Uber. We did close at the high of the day on Friday, and we closed at the high of the week. And we have this kind of bullish monthly engulfing candle on Uber. We did close at a new all-time record high close, but not a new all-time record high for the stock. Now, the catalyst this week is going to be earnings on Wednesday. So pay close attention to those kind of second-tier companies, right? Uber is probably not tier one because it's not breaking out. It's not up and out already. Netflix, Spotify, those are the kind of ones that are already up and out. But two of which, Uber is going to be on Wednesday, trading near a 52-week high. And then I would say tomorrow, Palantir, right? Trading near a 52-week high and trading into new all-time record highs. So not to kind of sound like a broken record here, and usually we don't talk about individual names on the live broadcast, but these are major turning points in the market. And kind of the way I was taught when I was young is the first ones out the gate are the new leaders, right? Remember, there's a reason why these stocks are trading at 52-week highs and into new all-time record highs as the market was getting crushed, right? So I would say your leader in this market, your liquid leader, is Netflix. That is already up and out. Again, Spotify, that has a great chart. That is already up and out, but it is extended. And then the few others that we talked about. However, with that said, not to repeat myself, but the S&P 500 has now had 9 up days in a row. Okay, law of probabilities, statistics, right, shows that we're probably going to get some sort of a pullback. I mean, it's just, we're bound to. So as you have, or may or may not have positions on in any of these names, if we have a massive reversal in the S&P, those names are going to get dinged up and could get dinged up pretty bad, right? If we have a 2% down day in the S&P, all those names that we just talked about are probably going to be down a multiple of that. So just keep that in mind. Check this out. We are now outside The Tonight Show, starring Jimmy Fallon at the NBC studios. Tiago is here. What's going on? Is a great young portfolio manager. Anything in particular you're watching for next week, Trade Brigade? Anything pressing? Somebody says, do I have a position in Uber? I do. In full transparency, I do have a position in Uber that I will most likely be holding through earnings, even though that is very risky in nature, being that the market is extended, but I'm sitting. This is now West 50th Street, Radio City Music Hall. Trade Brigade's Z-scaler has been breaking out of a solid base, worth a watch. GEV as well. That's a really good point. Yeah, Z-scaler also, great fundamental story. In full disclosure, I actually used to sell a lot of Z-scaler cybersecurity products back in the day. Their CEO, Jay Chaudhry, I think retains like 60% ownership of that stock. Something crazy, right? Maybe somebody could look that up really quick. But that is also another very big telltale for a big winning stock, is if you have the CEO, who is also the founder of the company, right, Jay Chaudhry. Maybe if somebody can look that up, I don't know, maybe somebody in the chat. I think he probably owns a crazy amount of the stock. I think like 60%, something nuts. So you know he has a vested interest in that company to really steer it in the right direction. But to your point, the cybersecurity sector in general has been catching a really big bid. You've had Palo Alto Networks on a really good run. Obviously, Trade Brigade, you mentioned Zscaler, but also CrowdStrike has recovered pretty much all of its losses from that cataclysmic outage, and I think is trading at a new 52-week high. Jim says, Tom, what do you think about Ken Fisher as an investor, Phil Fisher's son? Yeah, a little bit earlier in the stream, I talked about Phil Fisher, right? Common stocks, uncommon profits. But yeah, Ken is a great investor, and he's also a really great follow on the X platform. Ken Fisher and a few others are the only, I would say, handful of people that I have my tweet notifications on for every post. But yeah, Ken is a great investor. Geez, that Lucid was flying, the Lucid Motors. Top Cat is here, good to see you. Seth, welcome. AB Shields, this doesn't look too crowded tonight. It was pouring raining like 2 hours ago. It was like coming down in buckets. Long Island Duck is here. What's going on? Good to see you. Sam M, welcome. I think another big catalyst for this week is the FOMC meeting that we're having on Wednesday, or I should say the conclusion thereof it. Now there's a few things about this Fed meeting, right? There's really no, well, I should say there was really no major catalyst in terms of the economic data that we've gotten over the past 2 weeks that would really kind of push the Fed to change direction as it relates to a rate cut, right, or cutting interest rates. Earnings have been coming in fairly well. The non-farm payroll report that we just got out on Friday showing, 177,000 jobs added in the economy, as well as unemployment rate still sitting at 4.1%. I really don't think we're going to get much. Again, kind of what I said at the beginning of the stream, I think the only sort of fireworks that we may get in and around the Fed meeting is, unfortunately, probably going to come from our president, right, Donald Trump. Oh. That guy just backed out in traffic. Because as you know, Trump has really been lambasting and going hard at the Federal Reserve, saying that, look, inflation's down, you got to cut rates, and Jerome Powell has kind of fired back at Trump saying, we're in no rush to cut rates, really don't need to do that. And then you had Trump fire off that allegedly he's going to fire Fed Chair Jerome Powell, even though he doesn't have any authority to do that. And then he walks back his statement saying, no, we're not going to look to a replacement for Powell. We're going to let him, serve out the rest of his term. So, obviously not going to get any sort of a rate cut. And I don't think we'll get any super dovish talk, so to speak. I mean, anybody else have any opinions on that? Do you think that we're going to get some, 180 dovish talk from the Fed for rate cuts? Well, I mean, I would think the opposite, right? I mean, if inflation was ramping, right? If inflation was going in the opposite direction and really kind of going up, then maybe they would kind of say, we would have a rate increase as opposed to a rate cut? Or did I read your comment wrong and you meant, let me see, hold on. I'm trying to navigate this with the umbrella here. For rate cuts. Copy that. I apologize. Trade Brigades' continuing claims on Thursday were a bit concerning. That is true. We're a bit of a warning flag. Peters' Zscaler insiders hold 30% of the company. What's the percentage that Jay owns, by the way? TK Porsche says, Tom, Trump took a pass on Meet the Press this weekend on the fire Powell issue, reaffirming he will wait for his term to expire. I think also, not to get super political, but Trump is really doing a disservice, really hammering on the guy, because trying to work under those conditions is pretty impossible. And if we're being honest, if you think about all of the calamity and really all of the heartbreak and economic potential firestorms that he has averted, like crisis averted, Fed Chair Jerome Powell. Try being the Fed Chair through a global pandemic that we've never seen before, where government spending goes through the roof, everybody's staying at home, and we're handing out checks to everybody. Okay, yeah, try to be the Federal Reserve Chairman during that, trying to get inflation under control in those environments. So, also being able to maintain 4.1% unemployment during the, some of the most harshest conditions for interest rate hikes. At the fastest pace rate hikes we've ever seen. So I think he's doing a pretty good job, even though I can kind of criticize him a little bit. I kind of like to try to be as fair as possible. I think the guy has done pretty well for the mess he was handed, I should say. Ren 1018 says Jay owns 17.4% at Zscaler, which is a tremendous amount. Obviously, I said 60%, which is way terrible guess, but 17% is insane. K4, what's going on? Good to see you. But think about that for a second. If you have a CEO that retains 17% ownership of that stock, that's his bread and butter. That's his baby there. You want that vested interest. Not to kind of divert and derail the conversation too much, but if you think, and not to kind of throw shade at any of these consultants, but oftentimes there is a very clear path on Wall Street for these, and in the consulting world to have, a big Fortune 500 company, instead of making an internal hire, they'll just hire some consultant from Deloitte or EY, and then they totally just F the company up and run it into the ground, right, while taking a massive corporate compensation package. It turns out consultants are good at giving advice, not running companies. Okay, and if you just do a post-analysis of every corporate CEO that came from, a big consulting firm, these people just absolutely rape the company, take massive corporate compensation packages. They're not hustlers. And again, I'm not trying to come off as a hater. It's just, just look at, I would say the most recent example of that is the former Starbucks CEO, right? KPMG guy. He tells his employees that, he doesn't accept emails after 6 p.m. It's ridiculous. But when you have a founder, owner, operator, that is some firepower there, right? Founder, owner, operator. I think a good example is Zuckerberg, right? A good example is Elon Musk, right? Alex Karp is probably another good example, because these people have a vested interest in what they built, right? You could even go all the way back to Bezos. I think all of the major big, tech firms that have these rock star CEOs at the helm, obviously not anymore with Amazon. Andy Jassy runs Amazon now, but prior to that, it was Bezos. These founder, owner, operators are unbelievable. It kind of goes to our conversation of the stewardship, right? Money doesn't solve issues. When we get on our conversations about government and, housing crisis and homeless crisis and all that, money doesn't solve issues. It's the who's in the hands, right? The money is in the hands of who? Trade Brigades is Nadella, is an internal hire. Pretty unique story, climbing through the ranks, same idea. Yeah, also Alphabet CEO. Sundar, he is, I think he's an internal hire, like Grinder, all the way up the ranks. Hey, Daniel is here, says, oh yeah, I heard the same about consultants. A lot of them just start their career in those firms right after graduation. Yeah, and again, I kind of want to walk back my, barrage on consultants, mainly because consultants are very, very smart, capable people, right? The point I was trying to make is mainly, running very large companies as CEO. Usually ends in failure. But consultants in and of themselves, very smart, capable people. If you think about the big consulting firms, they recruit right out of the top 50 schools. So these people are not stupid people, okay? They come from the top schools, oftentimes Ivy League schools. So it is not, I was knocking them in the context of generally tends to fail at that high C-suite level, but their job is to provide expertise and to provide advice, really not, throwing down decision-making, I should say. Guys, you know what I noticed the other day? So right here across the street, this is 111 West 57th Street. And this awning is new. So this is the old Steinway building. And there's actually apartments in here. And then this is that new Steinway Tower by JDS. This is the skinniest residential apartment building in the world. It's so tall that you can't even see the top of it. And then you're getting an auction house here. Very similar to the retail at 432 Park Avenue. They also have an auction house here. But this is a very beautiful building. Very unique. I mean, if you had unlimited money, would you rather own a unit in the original Steinway building, or would you rather own a unit in the glass encased Steinway Tower, which are the same development project, but you have also units in the Steinway building as well? Daniel Leonov says the Steinway, like the piano company. Yeah, so this was, for those of you who are new here, this used to be the Steinway piano headquarters. This was actually a landmarked building, and it was a very interesting deal that JDS made because they had to jump through a lot of hoops to get this Steinway Tower built. And one of their pitches is that, they kind of pitched the city to say, look, I understand it's a historical landmark building. It is kind of falling into disrepair. Let us buy it. We'll totally do a restoration on the facade, and we'll keep a percentage of it totally intact. So if you go in there, it's a really beautiful building. Now this 125 West 57th Street, this is a new office building. And unfortunately, it's blocking some of the views of 157. So some of the lower floors of 157 are, their views are blocked now. This is a cool little bar here inside the Le Méridien Hotel. Darren Thorns, have ever been to an auction? Funny enough, yeah, I just went a few days ago to one. It was like a charity auction for the Promise Project. My boss always hosts that every year. The charity is called the Promise Project. I think I could put my umbrella away. Let me see. At least for now. Let's see. And they finally took all the scaffolding down outside of 157. So if you're new here, this building, 157 West 57th Street, this was the first building constructed on New York City's Billionaires Row. You have two awnings right here. The first awning is the Park Hyatt Hotel, which, funny enough, we're actually borrowing their umbrella for this stream. Thank you to the staff at the Park Hyatt. And the second door is the luxury condos, where Michael Dell owns a unit, and also Bill Ackman has a unit here. It's a pretty interesting facade. If you look at the facade here during the day, it kind of looks like a waterfall coming down. This is a Thomas Jewel Hansen project. Thomas Jewel Hansen also did the Sutton Tower. And you're right across the street from the Russian Tea Room, too. Patrice 2020, what's going on? Good to see you. If you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We tend to do these walkabouts every single day, starting at 8:45. Kathleen says, how can you generalize about all consultants? I probably shouldn't generalize about all consultants, but generally speaking, there again I go generalizing. And I have a lot of friends in consulting, and I work with consultants every day, so I probably shouldn't be turning the heat up on them right now. But again, it was in the context of characteristics of stocks, right? So if you kind of do a post-analysis of the biggest winners over time, we always talk about, right, it's the earnings growth, it's the sales growth, it's the pre-tax and after-tax margins, it's the institutional sponsorship, but also a category that's very underrated and underlooked is the stewardship of the company, right? A rock star powerhouse CEO, which tend to be owner-operators and innovators, not, a transplant consultant from KPMG, right? Not to down-talk them, but, just do a post-analysis of all the biggest winners over the last 10 years, right? And by and large, they've been these, ultra-high beta tech companies with founder, owner, operator, CEOs, like Zuckerberg and the like. Check this out. This is Central Park Tower. It's so tall you can't even see basically halfway up the tower. Speaking of consultants, and also, obviously, we had a conversation about Warren Buffett. The Berkshire Hathaway shareholder meeting was this weekend. He's going to be retiring at the end of 2025, which is crazy that we got to see that life cycle of really one of the world's greatest CEOs and investors that ever lived. But it also kind of reminds me of another story of a great investor who also had a very funny run-in with some consultants. I'm not sure, I think I've told this story a few times, but it's the story of Carl Icahn. He goes to buy this company, and there's so many employees of the company. There's like floors and floors and floors of people, and nobody can really understand what these employees do all day. So Carl Icahn does what any other investor would do on Wall Street. They would hire a consulting company to figure it out. And I think Carl Icahn paid them, like $350 grand for it. And, long story short, when all was said and done, Carl Icahn had a meeting with the consultants. He's like, all right, guys, let me know what they do. And the consultants were, at first, giving him this big presentation with all these graphs and, green graphs and red graphs, all these lines and squiggles going all over the place. He's like, look, I don't want to look at any of that stuff. He's like, just tell me what these guys do all day. And the consultants are like, look, Mr. Icahn, I got to be honest with you. We have no idea what they do all day either. So, Carl Icahn buys the company, lays everybody off, purges the entire New York City office. 6 months go by. It's like these people never existed. He never even got a phone call, not an email, nothing. So it's kind of a funny story about corporate bloat and consultants, which makes me kind of think, in the age of artificial intelligence, and I'm not kind of advocating for anybody to get fired, but, honestly, how many people do you think there are across organizations globally that their jobs are really not, like, if you didn't show up to work tomorrow, nobody would really even notice? It's definitely not 0%, right? There's always going to be a percentage of people at every single company that, again, not to sound harsh, if they didn't show up for work tomorrow and they decided never to show up ever again, the company would still, operate in the same fashion, if not, hesitantly do I say better. And I think in the age of artificial intelligence, I think perhaps AI is going to expose that. One of you, I think it was Charles. Appreciate Charles for sending me this video. It was probably one of my favorite recent YouTube videos I've ever watched. And it was an interview with the CEO of Citadel, Ken Griffin, at the Stanford University, I think it was like a Stanford University Business School conference. And if you haven't seen that interview, you really, really got to watch that interview. That is an unbelievable interview. Where Ken Griffin kind of leans on that theory and says the same thing. And he's like, the number one most important thing for the US economy as it relates to AI is how are we going to kind of take care of all of these people who are going to be replaced by artificial intelligence, because the change could happen very, very rapidly. It was an interesting talk. I'm about, I watched it once, but I need to kind of listen to it again. In any event, here we are at Columbus Circle. This is 59th Street. We're looking up at 1 Central Park West and the Deutsche Bank Tower. Hey, Matthew M., good to see you. Thanks so much for joining us. Amy T., welcome. Marketing videographies, as my wife says, the same about Sephora. Managers don't require much effort from staff and they oblige. It's kind of like a double-edged sword, because AI is 100% going to increase efficiencies everywhere throughout the economy. I mean, things are going to be so efficient. The only place where I'm a little bit hesitant is customer service and call centers. And I'm also taking this as a little bit of an excerpt out of Ken Griffin's interview. He kind of tells the story about, he knows this guy who runs huge call centers all throughout the United States and the world. And he's like, his target is that in 10 years, he wants everybody at the call center to be replaced by essentially an AI automated system and chatbot. Which kind of makes me cringe a little bit, because every time I have to contact customer service, it's either one of two things. I get caught in an endless loop on automated kind of AI chat systems where I don't get anywhere. And then when I finally get somebody on the phone, it's just a game of circle jerk. It's like, oh, so sorry, you have to go to this department. They transfer me to this department. You regurgitate the same story. Jerk you around to the next department, right? They're like, oh, but you have to go to this department. You're like, I already talked to that department. They said I have to talk to you. You must have got the wrong person. Jerks you back over to the next one. So if there is no people, I think it's just going to be like an AI doom loop. Maybe that's being a little bit pessimistic. Maybe it will improve. I mean, my current experiences with just regular AI bots such as Grok or GPT have been fantastic. But whatever these call centers are using now are definitely not that. So maybe it'll be like an open AI branded call center. We'll see. There is one company that has unbelievable, outstanding customer service from a call center perspective, and that company is 1-800-CONTACTS. I've never experienced better service than calling customer service at 1-800-CONTACTS. Wow, look at Jean-Georges. It's packed. There's not a table empty in here. Pretty wild, right? This is 1 Central Park West. This is where they take the congestion pricing. Professor Daddios is the red Cybertruck. Let's look for it. I think they took a lot of the parking away. Let's see. I think the internet is no good here. Kathleen's is in healthcare. We have a lot of people monitoring quality, compliance, etc. Wow, this place is like a junkyard over here. I get it, there's nowhere to put the trash, but that's a lot of garbage. I mean, for being the Trump International Hotel and Tower, they should probably rent like a big dumpster to put it in, right? I mean, that's a gigantic pile of garbage for being right outside one of the most expensive buildings in the entire world, 15 Central Park West. Oh, I think they're redoing the sidewalks here. This actually looks pretty good. Just a great building. Jeff Bezos. This is fitting. Hilarious. Andrew Lee from Staten Island. Good to see you. Hopefully you're doing well. Curious to see what futures are doing right now. It's about 10:04 p.m. Eastern. I think when I started, just started doing the stream, I think the S&P was off about 0.5%. I think the same thing for the NASDAQ and the Dow. Curious where futures are now. Also curious to see where Asian markets are. Trade Brigades is down quite a bit. You know, it'd be interesting to see if we open down big. Let me try to cross the street here. Let's say if we open down like 1%, and then we rally throughout the day and close at the dead highs. That would be very bullish. You know, in bull markets, usually on the open, the market opens down and you rally throughout the day into the close. During bear markets, it's actually quite the opposite. During bear markets, you have these big gap opens and then you fade and roll over throughout the day. Okay, the Nikkei is up 1%, so Japan is printing up 1%. And I don't think we've gotten any like earth shaker headlines. I think the only thing, it's not really an earth shaker, it's not even really that big. And I don't even know if it was true or not. I thought, when I first read it, I thought it was like a meme on X. Did President Trump come on Truth Social and say that he's going to tariff movies that are made outside of the United States or something, and he's like, we need to make movies great again? Or was that fabricated? Hey, Gene1649, thank you so much for your support and your donation. I appreciate it very much. Hopefully you're enjoying the walks. Now, here's the funny thing about that, right? And this is regardless of the political spectrum you sit on. This is just kind of funny. What I just said sounds so ridiculous that you would say, oh, there's no way that could ever be possible. But with Trump, it's actually kind of possible that he said that. Like, you'd be like, yeah, that's believable. I definitely believe that he said that. So you could definitely believe that he said it, but you could also believe that it's fake news, and that's why it's so hilarious. That's why it's so funny. Check out this looking up at 220 Central Park South. You know, speaking of Hollywood, there was an interview that I was actually quite impressed with. Who's the gentleman's name? I keep forgetting. He's one of the most famous actors of all time. And he was doing an interview on the impacts of artificial intelligence in movie making. Ben Affleck. Did anybody else see that interview? I was, kind of almost a little bit taken back by it because here's the thing. I think a lot of publicists, right? If you're a big Hollywood movie star, the publicists and all of your people and your team make you so mysterious to everybody else, where it's almost like you're not even a real person, right? Like Leonardo DiCaprio, all these guys, they're not real people. They're like, painted, molded sculptures of like a PR company. So when you actually see them engaging in a long form interview, it's like, holy crap, this guy's an actual person and he's actually a pretty sharp guy. I forget the interview's name, but if you just type in Ben Affleck, AI, the interview will pop up. And he is pretty impressive with what he has to say about artificial intelligence, CGI, movie making, budgets for films, employment for films, and even some criticism for Hollywood. It's pretty cool, pretty cool. And you never really even think about this stuff, or the logistics, or the economics, I should say, of filmmaking. And he said I think I'll paraphrase, he said a lot of the reason why a lot of these films are moving away from Hollywood is because it's just too expensive to live in California and LA. And he's like, it's really not the famous actor, right? It's not the A-list celebrity who makes the movie. It's everybody behind the scenes. The camera crew, the audio visual, everything. And if they can't afford to live where you make movies, well, you can't make a movie there. So it was a really impressive interview. I also don't know how they're going to compete with Netflix. That's another company who's reporting earnings this week. I think we're going to get Disney's results on Wednesday. Now, Disney is another company that's not been doing well. I think one of their new movies recently flopped. It was a write-up in a Barron's article today about it, or I should say over the weekend. I think the new Snow White movie brought in like a fraction of the revenue that they said they were. And, you could argue whatever you want. I didn't even know the movie existed until I read the Barron's article about it. And I was doing a little bit of research. I punched into Perplexity. And then it brought me down this rabbit hole of it's woke or this or that. And then I just kind of shut it off. But besides the fact that if it's woke or not, right, that's not the point that I care about. The point, right, Hulu and the like, are really changing the game for budgeting and just the economics of films and shows and movies. And I don't really think anybody's going to be able to compete with Netflix. It's going to be very difficult. Here's the Universal Music Group. Scott Solomon says, "Hey Tom, stay safe and stay dry." Thank you, Scott. Khan says Amazon is making movies as well. Yeah, the competition is insane, right? We've had this conversation multitude of times. There's just so much competition. There's so many streaming services. I think that's the new Model Y. Let's check this out for a second. Yeah, I think this is the new refreshed version of the Model Y. Looks really good. Now, I've been driving the Tesla Model S and the Tesla Model 3 pretty much every day. And I love the Model S. But for some reason, and this has kind of just dawned on me today, for some reason, I just love driving the Model 3. I feel like it's easier to drive the Model 3. And I think it has a lot to do with the steering wheel. The Model S, I have the one with the, what is it called? Like that yoke steering wheel where it's not a full steering wheel. But the Model 3, it's like a very, I don't want to use the term cheap, right? Because it's not cheap. But I feel it's basic enough for me where I could just rip it around town and it gets you there quick and it's easy to drive. However, if you're going on highways, the experience with the driver assist or the autopilot is unfreaking believable. If anyone here has a Tesla and they've used autopilot before, the thing, it's mind-blowing. You press the button, it goes through the turns, it really makes driving a lot less taxing. And I could only imagine what the full self-driving package is like for the Tesla. Pretty incredible stuff. But as a daily driver, I would much prefer the Model 3 to the Tesla Model X. Or the Tesla Model S, I apologize. Jamie the Rooster, what's going on? Bishop Bond, welcome. KM Ramsey, what's up? Let's cross here. And we're actually going to walk right under the Ed Sullivan Theater, which is where the Stephen Colbert films his thing now. Wow, look at the new construction site. This used to be the headquarters of Bad Boy Entertainment. 1710 Broadway. I think it's going to be luxury hotel or something crazy. You know, speaking of vehicles, another kind of partnership that was interesting to me is Waymo's partnership with Toyota. And I think on Uber's earnings call this Wednesday, there's going to be a lot of talk about, you know, how Uber can maintain their moat in the age of autonomous vehicles. Because there's a lot of people that think Uber is going to be on the bottom of the pail, so to speak, in the age of full self-driving and autonomy. But Uber has the network, you know, Uber has the platform. Here's Angelo's Pizza. This place has been here forever. And this is the Ed Sullivan Theater with a miniature homeless encampment outside. Everything in Miami says Uber will eventually have buses. You know, there is a new Uber rideshare that'll take you from the city to LaGuardia Airport for I think $10, which is cheaper than any taxi, which is cheaper than any public transportation. I think I may have to try that. Because Uber's now, I mean, if you're in New York and you're taking Uber every day, I mean, you're gonna run up $1,000 Uber bill a month, easily, if you take Uber every day in the city. Susanna Q4 says, I used Waymo in Scottsdale, Arizona. Unbelievably amazing self-driving ride. You know, I gotta take a trip out there and film a fully autonomous ride. Oh, I think next year Waymo is coming to Miami. So maybe I could just hop in a Waymo when I'm in South Florida, but now the question is, at what point does Waymo become extremely profitable to where it would be advantageous for Alphabet to spin off that business? That's the multi-billion-dollar question, right? At some point, will it be worth Alphabet or Google to spin off Waymo? This is Gallagher's Steakhouse. This place is great. We'll quickly take a pit stop here. I know, Norris says, you're not kidding. I used an Uber to and from my office and it was like second rent. Well, if you take Uber from Manhattan to the airport or from the airport back to the city, I mean, it's going to be $75 if you're lucky. If you're unlucky and you're, you know, landing after 11 p.m., it's going to be significantly more than that. I think the most I ever paid for an Uber was $200 from the airport. I was going to show you guys the steak, but there's too much condensation on the glass here. But this is the Gallagher Steakhouse dry aged room. But there's just too much condensation. I'll try to wipe some of the condensation off. I mean, look at all those steaks in there. Isn't that incredible? That's insane, isn't it? Just an amazing, amazing place. Funny story, I've told this story a million times, but I was on a business lunch here at Gallagher's this winter, and I'm on my way to the bathroom, and I bump into Bill Wang. I don't say anything to him, but I'm like, what the heck? And yeah, I think he's facing, 30 years in jail, I think, or more than 30 years in jail. But yeah, Bill Wang was eating with his entire, it looked like his entire family at Gallagher's. And I was like, isn't this guy supposed to be in prison? So I texted one of my friends, and I guess he had an additional trial. Now, for those of you who don't know who Bill Wang is, he is the founder of Archegos. When that big hedge fund collapsed, he's a tiger cub. So he's one of the original founding employees who worked under Julian Robertson. And I ran into him right there at Gallagher Steak. Pretty crazy. It just kind of makes you reflect on the lessons, of greed. Because he really didn't have to lever up like he did. Essentially, he went around Wall Street, bank to bank, pretty much at every single bank, and got unbelievable leverage risk without telling the other counterparties he was levering up. And he was a rich guy. I mean, he was worth billions of dollars. And it's almost like, how much is enough? Will it ever be enough? Is there ever enough money for these people? I don't know. I never had that problem to have billions of dollars. So I don't know. Maybe it is like super intoxicating, when you're on that ride. I don't know what it's like, but again, I can't put myself in his shoes. But I feel like if I was worth even like maybe 100 mil, especially $1 billion, not that I would take my foot off the gas, so to speak, but I'd be like, okay, I don't need to like throw down the hammer. I don't know. It's greed is a very intoxicating emotion. And now money is worth zero, right? Money technically isn't really worth anything, right? It's the value that we assign it. I mean, if you're in a prison cell, monetary value really doesn't mean much of anything, right? Can't buy anything in prison. If you're in prison for the rest of your life and you're a billionaire and you're sitting in this next to a cell to a guy that may have, $200,000 in debt, you both have the same resources, right? You both have the same quality of life. Anyway. Yeah, Jen says maybe it's power. It's very controlling, for sure.
What?
This is juniors. Anyway, not to derail the conversation too much from autonomous driving. We did review all the major corporate earnings that are coming up next week. I think the two that I'm going to focus on the most is number one tomorrow, Palantir, ticker symbol PLTR, and then I'm very interested in Uber that's set to report on Wednesday. Now, the original Juniors is right outside of Atlantic Terminal, Brooklyn. Oh, really? Out and about, this is your favorite Juniors location? Interesting. You got to try, and I don't know if you may have tried it already. Check out the Atlantic Terminal, Brooklyn location. I think that's the original one. This is the Crown Plaza Hotel. Oh, you know what's another company that reported a pretty solid quarter? Airbnb. Now, the guidance, there was a little bit of hesitancy in the guidance for Airbnb. But maybe I'll give you a little bit of extreme anecdotal data. All of my units that I rent out on Airbnb, I only do month-long rentals. So I don't do daily. You can't stay at my place for a day. You can't stay at any of my places for like 2 to 3 days, not even a week. It has to be 30 days or more. The reason why I do that is because I found it attracts a higher quality of a tenant, particularly in a place like Miami, right? Chances are, if you're renting to somebody in Miami for a Friday night, Saturday night, well, what do people come into Miami to do on a Friday night or a Saturday night, right? I mean, your place is going to be, God knows what's going to happen to your place on a Friday night or a Saturday night in Miami. But if you can find somebody who's going to rent it for a month or 2 months, I've found that they're a higher quality candidate or a very, very high quality tenant. So I've gotten a lot of like travel nurses, a lot of people thinking about relocating to Miami and they just need a place to stay temporarily. Students, I've gotten a lot of students, and this summer, kind of piggybacking off of last summer, a lot of interns, a lot of summer internships in finance, which has been pretty crazy. So I'm all booked up until September, which, for Miami in the summer, usually it's the opposite. Usually usually in Miami, Florida, you have a tail off in demand going into the summer for rentals because nobody wants to be in Miami when it's, a little road rage. Nobody wants to be in Miami when it's 90 degrees and 100% humidity. But a lot of people down there now staying longer term. Stylish Bunny says, am I on Furnished Finder? I am not. I only post on Airbnb, that's it. Trade Brigade, have a wonderful night. And best of luck tomorrow. I'll probably see you in the morning, by the way. I'll probably be on your stream, have it up at the office. Best of luck in the trading day. Stylish Bunny says, Furnished Finder is good for long-term rentals. Tenants must sign a lease. Yeah, I would much rather have Airbnb, like an intermediary, facilitate the transaction. And I know what people are saying. Well, you must pay so much money in fees every year. And the answer is, yeah, I pay a lot of money in fees to Airbnb, but it's definitely worth it, right? For me anyway. I don't have to deal with these people. I don't have to talk to these people. They're vetted through Airbnb. You have to upload your photo ID. You get the money up front. So essentially, Airbnb acts as almost like the property manager, not managing the property, but vetting the tenants, so I don't have to do that. Now, it comes at a cost, but I think for the service, it's definitely worth it for me at least. I'd rather make less margin, but I'd rather have my gross margins be lowered, but have no headaches, right? Also, a little bit of a anecdote here, maybe just in case anybody is thinking about renting their place or thinking about, buying your first investment property. Just from the data that I have from doing this, the biggest red flags on a prospective tenant on Airbnb is if they ask for a discount. It may seem like the littlest thing ever, but I've only ever had problems with maybe 4 guests. And not like huge problems. I've had huge problems with 1, problems with 3. And every single one of them follow the same set of characteristics. Because I record all the data for each one of them. And on the onset, they always ask for a discount and haggle on the price. So anytime I get an inquiry now, or even if they say, hey, is there anything you could do on the price? I don't even respond to them anymore. So I don't know what it is, but every single time somebody is like, hey, I'll even stay longer if you give me a discount, big red flags for problems. Huge red flags. It's kind of like if you give somebody an inch, they want a mile. Another huge red flag is if they want to see the property before they move in, which I've never allowed anybody to see the property before they move in. But that is a number 1 red flag. I don't even respond to their inquiry. If they're like, hey, your place looks great, I'm going to be staying for a month, I really want to see it beforehand. Nope. Nope, 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 nope. I don't even respond. Many of you may be saying, oh, Tom, that's a little bit crazy. If I'm going to stay somewhere for a month, I want to see it at least beforehand. That's fine. You could see someone else's place beforehand, not mine. And I know that sounds crazy, but, you open yourself up to huge problems when you let people kind of know the address of your property before, coming and meeting with them. It's kind of like you want to run it as the most detached professional business you can. I usually don't even I don't like my renters even knowing that I'm the landlord, right? You just communicate with the company through the chat and everything's fine. And I have 5-star reviews and I'm a super host on Airbnb. I have the cleanest place, minimal furniture, almost zero furniture in the place. And I have all 5-star reviews. Because oftentimes, if you're renting out a place and you have all of your personal furniture in there, it can come off very cluttered and it also comes off very dirty. A cluttered place, even if it's clean, appears dirty. So the more minimalistic you can make it, especially if you're renting to long-term tenants, the happier they are, especially in the bathroom. You want pretty much almost nothing in the bathroom. No shelving, no nothing. This way, the bathroom stays extremely clean, exceptionally clean, and it's very easy to clean the bathroom. So the less furniture, the better. Just put a regular queen size bed in the room. You put 1 nightstand, nothing in the closet, and they get 1 standing desk with the chair. Nothing else. I mean, anyone else have a different perspective, but generally speaking, that's been very successful for me. And it's allowed me to maintain the property, keep it very, very clean, and minimize the amount of problems I've had with tenants. Look at the Knickerbocker here. You know, another thing that you could do to kind of avoid, and this is if you want to avoid the partying. You know, some people have a house where they have a pool where they could command a premium for that. That's just kind of not the rental business I'm in. I priced the property below market value, and my target market is students, you know, graduate students, medical students doing like a rotational program or something like that. So if you could rent individual rooms at $1,000, you know, they have a place to park in Miami for $1,000. That's a slamming deal for them. So in the description, you kind of say that up front, right? We're looking for students, graduate students, remote workers that need a quiet place, and that kind of really vets everybody out. Let's take a look at Salesforce Tower. Mark Benioff. Darren says, I stay at Verbo's a lot, and I'm so very picky. If I'm going to spend money, I'm going to have fun for sure. So Verbo is what now? That is, you rent out the entire house on Verbo, right? It's not like you could rent out individual rooms. It's an entire place only on Verbo, I believe. Brandon says, what are your thoughts on New York City's Airbnb ban? Was it effective? Well, I'm not too sure if it was it technically wasn't a ban, but I do get what you're saying. I think any form of price control or government intervention in a free market generally tends to have the opposite effect of what they want. If anything, it just is going to take more supply off the market, so to speak, and make it more expensive for tourists, which is true. You know, it used to be somewhat affordable to come to New York City and book through Airbnb. Now, I think it has to be on like a very, very long duration. And there's some rules about the owner has to be on premise while they're renting out the Airbnb. So it's taken a little bit of supply off the market, and it's benefited a lot of major hotels, which I get, right? Because in New York, I mean, if you haven't noticed, we have a pretty strong hotel lobby, right? I mean, they pretty much have a stranglehold on the city. So I think it had a lot to do with that, because Airbnb and other platforms were really eating into their market share, and it was competition for them. And those big corporate companies, well, although Airbnb is a major corporate company too, they don't really want the competition. And now you have, hotel prices in the city that are just crazy. I mean, out of curiosity, if you just look at, a hotel room in Manhattan for this Friday, I mean, you probably can't find anything decent for less than $300. Let alone like a 4-star or a 5-star hotel. Those are probably going to be like $600 plus. So things are very expensive. Hotels are very, very expensive in New York. Brandon says, I agree. I hope there's more of a focus on cutting red tape and increasing supply rather than more regulation. Yeah, and I think slowly but surely New York City is getting better at that. They are. I mean, I'm a big critic, but I do give credit where credit is due. Overall, I think New York City is starting to catch the drift. And, you do have a lot of, well, I'm not going to go out on a limb and say a lot. I should say a lot more supply in the pipeline. I mean, just look at all of the other, major cities that are seeing price declines right now, right? There are cities where you've had major building booms. Like, look at a city like Austin, Texas, for example. If you've been to Austin, Texas recently, it seems like there's a new apartment building going up on every corner. There's cranes everywhere for, luxury rentals, and that, dilutes the market, which is good for the average person because, you could actually rent something relatively affordable. For example, there are probably over 100,000 rentable quote-unquote units in New York City right now that landlords just choose to keep off the market. Now, the reason for this is because, number one, the landlord would probably need to put in roughly like $75,000 a door, right, to get these things rent ready. However, if they were to put them on the market, they can't put them on the market at market value. They have to put them on at the rent stabilized or the rent controlled valuation. So doing the cost benefit analysis of that, it just really doesn't make sense for me to spend 75 grand to do a renovation to get this unit rent ready, to put it on the market to rent it for, $1,400, $1,500. So I would rather have the unit sit off market, totally vacant, in poor condition, and maybe just try to sell the building to somebody else. So there's a lot of supply on the sidelines in New York that would be on the market, but the cost benefit analysis just doesn't make sense. I'm not going to spend the money to get this unit rent ready if I can't put it on for a market rent. Yeah, unfortunately at night, a lot of the banks turn into mini homeless encampments. It's sad. Yeah, I heard about that. Marketing videography, crazy. So did you hear about not using Newark Airport by one of the air traffic controllers? Yeah, I don't know what's going on in Newark. Newark Airport is like a horror show, which is concerning because I may fly out of Newark Airport very soon. So there's this new, it's not really new, maybe 5 years old. So if anybody flies to Asia a lot, there's this airline called Air Premia that competes with Air Korea and Asiana Airlines. And they fly out of Newark exclusively, and it's very cheap. You could probably get a round trip from Incheon, Seoul to Newark for maybe $1,200, which is very good. And I may fly out of there at the end of the month, and I'm kind of nervous about it because of everything that's been going on at Newark Airport. So we'll see. DC 322 says you should use JFK. Yeah, but if I use JFK, you know, I'm going to pay $3,000 round trip, which I'm really not looking to do. And Air Premia is not bad. Anyway, just a quick recap. Big earnings week. Tomorrow we have Palantir. Then Wednesday we have Uber. And also we're going to hear from the Federal Reserve at the conclusion of the FOMC meeting on Wednesday. Remember, we're going into this week on a 9-day winning streak for the S&P 500. So a pullback is destined, okay? 9 days straight up in a row in the market. Expect a little bit of volatility this week. We'll see what happens. Futures are a little bit red. But if you guys enjoyed the live stream tonight, feel free to leave a like on the video. Click the subscribe button if you're new. And we will see you back here tomorrow night at 8:45. Enjoy the rest of your night and best of luck in the week ahead. Professor Dario, thank you so much. Harry Connor, always appreciate it. Western Mass Dave. Desi, Craig, thank you. Mohammed, all of our moderators. Nora Kins, Sally, out and about. Always a bull market somewhere. You just need to know where to look. Madison 32, take it easy, everybody.